I thought we'd sort of put this anxiety to bed, some sort of agreement between the key players in China that they wouldn't keep cutting prices, but it seems they have to.
Just a resolution too, but Elon's hard to predict. But here's what I think is happening. Every automaker in the world is going all electric. Tesla has a cost advantage over everybody else. They're simply put trying to grab market share. What American investors, I think, often don't understand is not only China the largest auto market in the world now. You've got to win China if you're going to be the global winner. Tesla's being very aggressive. Interestingly, they make 54% of all Teslas made in China today. Part of the reason for that is they can make them less expensively. And I think Elon's trying to take advantage of that price advantage he has as a low-cost provider.
I mean, you say they're going for market share, but BYD is a fierce competitor. Ultimately, does it spell concerns more globally as well for EV competition?
Look, no one should be crying for the Chinese. Of the top 10 auto brands in the world, 7 of the 10 are Chinese. So most Americans are thinking, how are Ford and GM doing? The real smackdown is this. It's Tesla versus the Chinese, with Volkswagen coming in quickly because the biggest seller of vehicles in the world in 2022, they've got deep pockets, global manufacturing. But those are the big three. Everybody else is trying to catch up. So it'll be an interesting battle. What's so fascinating to me is Tesla, really the leader in EVs for a long time, the first ones to connect every vehicle. They've really led the world, not just in bringing battery production in-house, increased robotization of manufacturing, but probably most importantly, really taking the lion's share of and optimizing for over-the-air software. That profit from software sales drops right to the bottom line. That's why the other news piece this morning, yes, you've got is Ford hired Apple's software head to help them figure out their software pricing. They need that profitability.
We're going to bring those details about Peter Stern later in the show. Hey, Steve, let's remind our Bloomberg Technology audience about these specific cuts. It's a $1,900 cut to the 2 highest spec Model Ys in China. So a 4.5% cut to the long range, a 3.8% to the performance spec of Model Y. Those are not the highest volume trims. But if Elon Musk came to you and said, you know what, I've changed my mind again. We're going to cut prices. We'll just keep targeting volume and growth. What would you have said to him?
Well, look, as I know better than most, Elon's awfully hard to predict fellow. But I'm looking at the market here, and I'm seeing Tesla trade down a bit. And I know investors are thinking, gosh, reduce profitability. I think that's short-sighted. Here you have a global battle, and Tesla has a chance to take more territory now, and I think they're doing precisely the right thing. 15 profitable quarters, close to $20 billion in profitability last year. They can afford it. Why not do the land grab now? I think that's what Tesla's thinking, and I think they're right to do it.
Hey, Steve, how's China changed since the time you were on Tesla's board as a priority for the company?
China was not even a speck in the rearview mirror. For the last 50 years, we've all been looking at the Japanese, increasingly to the Koreans. They make outstanding cars. And by the way, Hyundai and Kia coming out with the iconic, these are great brands. They're going to be part of the picture. But China, simply put, was not in the picture. Fast forward 20 years, what's really changed is electric cars are really better in virtually every way. They're faster, they're better for the planet, they're more reliable. The big fly in the ointment is they just plain cost too much, but the cost per kilowatt hour has gone down dramatically. Think about this, from $1,100 a kilowatt hour down now to about 90. The reason the Chinese are doing so well, one, the Chinese government subsidizes their auto companies, but two, most all of the auto batteries in the world are made in China, and that gives them a competitive edge in battery pricing. The real question is, can the Chinese use their edge in lower cost batteries to catch up on the edge Tesla has in manufacturing and software?
Hey, Caroline, Steve's got a great grasp on the data. He's talking about 54% of production coming out of China, but it raises the question of, well, hold on, what if you cut back in China as well?
Yeah, I mean, when we're looking at a near third drop in shipments for the month of July coming from China. Steve, make this global for us for a moment, because they don't just produce in China. Yes, it's been a key area of focus, but they produce largely in the US, also in Germany. They're looking to expand. How much are we going to see a curtailment of overall production, or indeed a curtailment in overall profitability globally here?
Well, 2 points. One, Tesla loves producing in China because costs there are so low. But you'd be foolish not to be aware of the geopolitical concerns on the horizon. And that's why doubling down on the capacity size in Berlin, expanding capacity in China, and about to break ground this month with a new plant in Monterrey, Mexico. So Tesla's not stupid. They're diversifying. They're going to other markets like Mexico where they can enjoy the benefits of lower cost vehicles. But I must say, I think Elon, having survived the tough times 5, 6, 8 years ago, where it wasn't even sure the company would survive, he's focused like a laser on making sure he has a cost advantage over the others. I think he's going to squeeze a lot of the new incumbents, and I think what you're going to see very quickly is this big global shakeout, again, between Tesla, who's sitting on top, the Chinese who are coming quickly with very low-cost batteries, and Volkswagen, which is probably the other Western brand that I think has done the best at modernizing, bringing battery production in-house, and improving manufacturing capabilities.
Steve, very quickly, your reaction to Zach Kirkhorn, the CFO of the last 4 years, 13 years at the company, leaving Tesla?
Well, it's no surprise. Executives at Tesla tend to turn over fairly often. The fact that Zach survived as long as he did is a testament to him. But I don't think it's a surprise. You know, people tend to think Tesla is a one-person company, and Elon may be a visionary, but you got to give him and the Tesla board credit. They've built out their executive team. They're playing long ball here, and I think as you look at their revenues this year, I believe they'll crest $100 billion with the highest profitability in the auto industry. Hard to complain about what they're doing right now. They look a little smarter than the rest.